we are back, much as we were as we left you with last call on Friday. I'm Ilya Spivak in San Francisco. That's Jamal Chandler in Chicago. Welcome to First Call. Hope everybody's got their seatbelts on, their helmets strapped on tight, because we had quite the end of the week last week. We'll see what Asia and Europe do with it today. Mr. Chandler, how are you feeling? Are you ready for this, whatever it's about to be here?
I'm ready, man. I mean, it might end up being carnage. You know, my kid had a football game today. We were 6-0. We lost our game today. So you know what that means? That means, not only did things not go well on Friday in the markets, things didn't go well on Sunday for the football team. So it could be an ugly weekend. I mean, we still have a Bears game on Monday, Ilya. I'm not going to get too bared up yet. No pun intended. But we'll see.
I mean, it was obviously a nasty day on Friday, and it was a nasty day all around.
Yeah.
It was risk off no matter where you looked. It's going to be interesting to see, I think, what the Asia and European markets do with this. Over the weekend, we had some comments out of China. Obviously, the issue here was that there's apparently escalation in the U.S.-China trade war. Looks like the president took umbrage with China putting export controls on rare earths materials, and is no longer interested in meeting Xi Jinping at the APEC conference, is going to attempt to push through more tariffs on China specifically. So getting feisty, and the markets didn't like it. So sharp down days. We can go to the charts here.
I mean, I know you typically have a bearish disposition, and
in this market I do, yeah.
Yeah, and I'm, and that's what makes a great market, a two-sided market.
Yeah.
Truth be told, do you feel like what was said should have led to this type of move, or do you feel like it was sort of just some other kindling underneath the surface? Honestly, it seemed like a little. We've moved on bigger things, right? Like we've moved on. In 2008, obviously, we had products that people did not understand and did not know what they were doing with, and that led to the type of movement that we eventually had, a sustained downward movement. We had, in 2022, a very bear market where, we had been dealing with inflation for several months, if not a couple of years at that point, and that led to to increasing rates, led to the market falling the way that it did. Literally, Trump comes out and says, I'm going to put more tariffs on China. And we've been hearing about tariffs for a while now. Matter of fact, market has calmed down from tariffs. This is the biggest move. And we talked about this on Friday. This is the biggest move that we've seen on tariffs going back to April. I mean, It seemed a little weird. And so I guess what I'm getting at, I can't believe I'm saying this, but this is what I believe Sunday should be about. What I'm getting at is, was this a move that was merited based off of what we heard, what we saw, what Trump said about tariffs, or was this a situation where he was helping out his boys and the market just decided to sell off for whatever reason?
In my mind, this is sort of, I like to call this the Italian election indicator. There was a period in the early sort of 2010 to 2020 kind of window where Italy could not settle on a government, and the government kept collapsing. They kept getting a new prime minister. The government kept collapsing. They kept getting another, and it was this interesting dynamic where the same thing would happen over and over and over again, and the markets would care selectively. Right. And the whole thing was, okay, are there rate cuts and there's an Italian government collapse? Or are there no rate cuts and there's an Italian government collapse? So markets are contextual. The same thing can happen, and depending on what the context is, they'll care or not. So I think you make a very good point. If this was 3 weeks ago, 4 weeks ago, would the markets have cared about the identical headline? My guess, no. But they decided to care here. And I think that's ultimately more telling than the substance of what was said. Because the president has gone back and forth with China over and over again. There were tariffs, and then they were on pause, and then there were more tariffs, and then those were on pause, and then the deadline was coming up, and then we kicked the can down the road again. And there was this sense that okay, we're going to get a negotiation. Nobody actually wants a real fight. The president comes out and says something basically within the realm of what he said before. This is not new. This kind of stuff has been going on and on and on, frankly, since the first time that Donald Trump was president. And it's not like Joe Biden was a particular change of pace. I mean, he kept all of the tariffs and added some more. So this isn't new, but that the markets chose to care, I think, speaks to some sort of underlying weakness where the markets wanted a catalyst, they wanted a headline, they got it, and they took it.
Let's pull up ES futures real quick, bro. We got a big move to the upside, surprisingly. I mean, I'm actually a little surprised by that. And I don't know what to make of it. I don't know if we should sell it because personally, I was expecting markets to kind of be down after such a huge day.
Yes.
Honestly, I'm a
We have
little
a
surprised.
big we have a big gap higher, and we were talking in the green room before we came on here. Bitcoin was up in weekend markets, giving this kind of sense of risk on, and we're seeing it here. So there's your gap, pretty substantial gap higher. We're up about 1.1%, let's call it, about 71 odd points on ES. It's not a gap that takes us back. I mean, obviously, here's where the sell-off started, up here. And so this, see if we can roughly guesstimate here. Looking at how much of this
I don't know, man.
move
I think this might be a sell the rip situation.
I think so. So we've clawed back about 50% of the move here. So here's the 50% mark. This probably feels like something you sell into at this point, because I agree with you. If you look at this on a 4 hour, and let's get these multicolored things off our chart, this to me would be the line in the sand. So like 67.50. Whatever this consolidation is, this right here, if you can get back over it, okay, problem solved. But right here, you've got the underside of this range right here, and you're testing it on this gap. I don't know. This looks more like a retracement to sell into than it does a dip to buy.
Yeah, I feel like I really do kind of feel like this might be a sell the rip type of situation. Of course, I'm long Delta, so that's part of the reason why I feel like that. I mean, I really do, but I don't know. Typically, when you see that type of movement that we had on Friday, and again, it kind of came from out of nowhere. It's
Yeah.
usually sort of this psychologically damaging type of move after all these people had been expecting up for the time being. The only time we'll sell again, I think you only sell the rip here if you have long deltas because you stand to do really well on a day if we end up moving higher, not only through the overnight here, but on Monday as well. But I just feel like this could end up being a sell the rip type situation.
It certainly looks like what you would consider a kind of classic correction, where if this right here is kind of the underside of the range. So you go, okay, we got up here, we bounced, we established a sort of neckline floor kind of a thing, vaulted off it, came back, and now we're testing back in this area. This is a gap that looks like a retest after whatever this break was. And if you end up, let's say, closing this 8 hour or 4 hour bar, I would say a 4 hour is probably convincing enough. If you end up closing it under these levels, give or take, I mean, obviously support and resistance is never one level. It's more like a fuzzy, squiggly marker line. So if you look right here somewhere and you hold on the retest of this underside, this looks like it's holding and looks like it's more something to sell into. It's a similar story in the NASDAQ also. I mean, obviously, big bounce, but again, you're not even managing to come in for a real test of what was the underside on the range here. Let's call it somewhere around here. So I agree with you. I think this looks more like if over the course of today we get somewhere into here,
I mean,
a
they're already fading it.
$25,000 sell, yeah, it's already fading.
They're
A
already fading
25,
it. I mean,
yep.
seriously, like, and I'll tell you what, gold is, made a little move again. Have you ever seen anything like this? I really, again, when I think back to the move that gold is doing recently, it makes me think of 2010, 2011. I don't remember it being up on days where the market is up and also up on days where the market is down. And so
Yeah,
it's just so fascinating to me. I keep looking at that as one of the things that eventually that's not going to happen forever. I mean, I don't
no,
think gold is going to continue to just go up regardless of the market conditions. I think that's I continue to say this is the biggest thing to be worried about is that there's no real fade in gold right now. It just still see, and again, I know there's the there's been that what's the name of it? I can't remember the type of trade everybody's calling it right now. The debasement trade. I know
yes.
that's been the thing, but I'm really worried. I'll be honest with you, Ilya, on a day where the market is down 1.5% and gold is down 1.5%, because that's going to lead to them both being down like 3+%. I think.
Yeah, I mean, the problem with the debasement trade is that it isn't happening and it's wrong. And it's really funny to watch people go out there and go, well, gold is up a lot, so obviously it's the debasement trade. It's like, well, if you look at one chart and then you try to concoct your theory with blinders on, yeah, okay. But you don't have to go far. You just look at the dollar and you tell and you say, ah, well, this thing has been going up since July. What exactly is being debased?
Yeah.
So it's pretty hilarious, this debasement trade idea. Lots of people have been talking about it. To your point, here's the dollar index. I mean, you tell me where the dollar is going. This is the Fed right here, and since then we've gone. Oh yeah, this is really debasing, man.
All right.
Good God, this dollar is worth nothing except obviously not. And so whatever is happening with gold, to your point, it's weird, and the debasement trade explanation kind of sucks because it doesn't really line up with reality. Uh, Not in the dollar, and not, by the way, in the bonds either. I mean, if you thought that there was a debasement of U.S. dollar-based assets, you'd think the bonds would be getting smoked,
Mm-hmm.
which we saw in April. It's not like we haven't seen this dynamic, right? In April, there was this thing where the dollar and stocks and bonds were all falling at the same time, and you had this idea that, oh my God, the market is selling America, all of it, across assets, and saying, here, sovereign risk, legitimate sovereign risk. This is not that. I mean, very clearly.
No, it's not at all. And again, what's interesting too to me is that again we got a week where I feel like it doesn't often happen that we really completely tank in markets when you got the beginning of earnings season, and that's one of the big things that's coming this week, right? We got the banks coming in earnings this week. We got on Tuesday, I think we got J.P. Morgan, we got Goldman Sachs coming in this week, and that usually kind of provides. It's almost like what it's like. It's almost like when there's wars and it's like a ceasefire. You know what I mean? Like
Yes.
when earnings start, there's
Yes.
a ceasefire. Whatever bullshit was going on coming into
Uh
the
huh.
earnings season, we just put that to the side and we just focus on the earnings. And I wonder if that's going to take center stage, or if this sell-off that just happened, people are going to be like, hey, we just had a huge sell-off, and you know what? We're at all-time highs, and we're a little scared, and yeah, we're going to sell off some more. I wonder if that's going to happen. So I think we have a real fascinating week setting up here with these earnings coming up, with the inflation reports that we're supposed to get that we're probably not going to get. That's still kind of a thing,
Yeah.
right? Which leads back into the whole government shutdown, which honestly I could give a shit about, but it's a thing and it's existing, and it is preventing us from getting this data that the market literally has been moving on over the last several years now, a couple of years, I should say.
Yeah. I mean, we got a speech from Powell on Tuesday.
Yeah.
That's going to happen. We are supposed to get PPI data theoretically. We're supposed to get retail sales data theoretically. But if this shutdown continues, we're not going to get any of that. Obviously, we will get the earnings. And the earnings, to your point, I mean, this is stacked. You got financials all through Tuesday, Wednesday. into Thursday. CSX is also coming, which is an interesting thing I always look at as a kind of barometer on overall economic activity.
Dude, can we make railroad earnings great again? Those used to actually be kind of fun to
Those
trade,
used to matter a lot.
right? Like, what happened to that? I mean, do they still not bring in a decent amount of freight into our country? I mean, I don't know what happened, but
I'll give you a theory. If you look at the makeup of US CPI or PCE, whichever one you like, name an inflation indicator, the goods side of the equation has been non-existent, whereas all the inflation is in the services side. What that gives you a sense of is demand. Where is there a price pull from demand? Is it goods or is it services? We're only really starting to get a little bit of goods inflation now because of the tariffs. Outside of the tariffs, goods inflation has been negative for years. And so if goods are not really a driver of policy, if they're not really a major engine of demand, who's going to care about CSX earnings? They're not really a big window on the business cycle if the business cycle isn't being driven by goods demand. It seems like everybody blew their brains out buying stuff on Amazon during COVID. And as soon as everything ended and everybody came back out, they're like, well, we're buying concerts and comedy shows and airplane tickets now.
when's the last time you went to a good comedy show?
2 weeks ago?
For real? Who'd you see?
Yeah. I saw this comedian, small comedian. I think his name was Mike Lang or something like
Oh yeah, those are
this.
the best.
Like
Bro.
small show. It was great, but
Yeah.
it's
Those are the best.
been a summer of concerts for me. I've gone to like 6-7 shows this summer.
Word. That was me last summer. That was me last summer. I haven't gone.
Yeah.
So.
So I'm only taking a little break in October. November is going to be action packed. I'm seeing Doechii. I'm seeing Nas. I'm
Okay.
seeing
Oh,
The
damn, that's
Alchemist.
coming out that way. You're gonna be
Yeah,
upset with me. Actually,
with an orchestra.
Talib Kweli is coming not far from me. He's coming out to Milwaukee next week, but I can't go. He's
Oh
got some
man,
I know. I've seen him a couple of times, but I know I'm gonna have to pass on this one.
I love a Talib
No
Kweli
question.
show.
No
the
question.
first date that my wife took me on was a Talib Kweli show.
Oh, she's a keeper. You had to keep her after that.
I mean, immediately. That was it. That was it.
You had to keep her after that. That's dope.
That's it. I love a Talib Kweli show, but Nas is coming. Doechii is coming.
Yeah, she's amazing.
She's incredible. I've already seen her once this year, and we're going again because
check her out.
she's incredible.
Okay, I'm gonna have to check her out. Weird
Just
segue.
saw
but
clips.
You do have who? Oh yeah, you told me about Clips. I remember that.
Oh my God.
Yeah, it was a good show, right?
Go find you a Clips show, everybody. Incredible.
Word. I love how you have bonds up here because I mean I think that's a central theme this week too. Yeah. This is one of the bigger moves we've seen in about a month that we saw the other day, and it almost made sense, Ilya. The fact that bonds are up and scary when the market was down big. I mean, look, if too many things start making sense, I'm not going to know what to do anymore.
Right? It was like a window into a time gone by. It was like, wait a minute. It's risk aversion and the dollar is up and bonds are up and stocks and Bitcoin are down. Hang on a minute now. This is dangerously normal. Are we starting to think again? I know Dylan told us not to think. It's been working, but I don't know. Maybe that's what this is. Maybe the president said something scary enough that people had to have some thoughts.
Yeah, I still am. I mean, I'll be honest with you, I'm still a little confused by that because I didn't really think that was enough to take the market down 2.5%.
Yeah.
But again, I think there was, and I guess realistically, when that happens, when people like us who've been in the market a long time all agree that didn't seem like as much of a headline, that just tells you how many people are kind of levered up in this market. That just tells you how many people are probably a little overly too long. And as our fearless leader, like we always used to talk about, Tom Sosnoff would say, things are a little bit frothy. And I was feeling that. And again, I do have some long deltas. I would say most of my long deltas are 40 plus days out. Because in my mind, I was thinking like, even if we do get a correction, it's not going to happen during earnings, right? I mean, this is peacetime. Like I just said, almost all in the 20 years I've been trading, you don't necessarily see huge corrections during during earnings, unless it's a 2022 or 2008 or 2020, right? Like those are the
Yes.
times. And
Yes.
you're trying to tell me we're in the middle of that? Because if we are, let me know. I'll buckle up and be ready to go. But I don't feel like we're in the middle of that right now. And again, I mean, we could be. No, there's no doubt we could be maybe heading there. I mean, the rhetoric over this weekend seems to be heading in that direction.
Yeah,
Between
it didn't get any better.
yeah, it didn't get any better. So that it could be possible, but I just didn't feel like we were that at Friday morning during trading. I just didn't feel like that.
Well, I mean, I think you're absolutely right. I think this is really when you start to see this kind of a thing, and you go, okay, the market's conditioned us from April until basically last week not to care. They basically said, right. We got the tariffs. The administration is obviously amenable to market discipline because when they came out with that foam board and everybody lost their mind, they very quickly backpedaled and said, whoa, okay. The president came out and was like, everybody's getting yippy, be cool, 90-day pause, relax. Nobody is going anywhere in a hurry. We hear you. And the market said, that's all we needed to hear. We needed to hear that if we go crazy, they're watching, they're paying attention, they're taking the signal that we're giving them seriously. If they do something out there and we signal, no, back up, they will. And from there, the calm started to kind of spread over the market, where you got this sense like, okay, they're responsive, they're not going to ignore what markets tell them. Cool. All right. So that we got a sell off that was that big, I think you're right. It gives you a sense that the markets needed an excuse, that people had their finger on the sell button, that things were getting complacent, and that the markets said, oh no, and basically picked a catalyst. They needed one and they found it. And if that's what is going on, then to your point, maybe we are in some kind of a larger liquidation, deleveraging sort of a thing.
It's quite possible. Let's pull up SPX here and let's look at the at the money, the straddle for Monday, and then let's look at it for the rest of the week. Let's see what kind of potentially crazy pricing we have in here.
I mean, you do have something out here into Friday.
We got expiration coming up, and I don't know
We
the
got
size of
expiration
it.
coming up.
Yeah, we got options expiration coming up, just the regular one, no quadruple witching.
Right.
I yeah, 200
Garden variety.
203 points on the daily. It's so that's actually kind of interesting how it does that, right? Like on the AM
Yeah.
expiration, 203 points, but 166 for the whole entire Friday. Which damn, I mean, actually, now I think that wait, is that right? 166 points,
That,
I
that
guess, for
looks a
the
little
week. That's kind of high,
that
bro.
looks a little
Like,
spicy, right?
yeah, man, that's kind of high right there. Wow, that's well over 2%. I mean, we got well over a 1% move for Monday. I mean, that's saying a lot. We'll
Yeah. That
wow,
looks a little that's starting to look a little spicy here.
most
Um,
definitely.
we look at see what ES looks like.
Man, some big
Um,
moves.
oh yeah. Oh yeah. This I mean, the market is not happy. And if we look at let's see what VX futures look like here. I mean,
20,
it's
I
down.
think. Yep, just about 20 for the
Yeah, I
fund.
mean, it's in a little,
Yep.
which, you would expect, given what we just saw with how ES is performing at the open here. But still, I mean, this is a nasty, nasty spike. We
Yeah.
haven't seen a spike like this in a long, long time. I mean, we've got to go back, to your point, to April to get anything like it. And frankly, we didn't get 1 days like this.
Yeah.
I
Well, that's
mean,
the thing, right? Like when you're down as low as we were, you're in the 16 area, 16, 15, you do have that propensity, if for whatever reason you do have a massive move, to create these huge upside moves, right? A solid six
yeah,
point because things were just that low that it's like how can I like it's like a dry forest, right? Like it's a really dry forest and a really hot, summer. All it doesn't take much to start a forest fire.
no,
It really doesn't.
no. No, one little ash flick and everything goes up. Yeah, I mean, that's probably what has me thinking the most about follow through here is the market could have absolutely shrugged this off, and we've seen the markets shrug stuff like this off. I mean, take us back a week. We've seen markets shrug off stuff like this. If we get a true trade war with China, a for real one, as it were,
Mhm.
yeah, I mean, that would be very bad. That would be economically very bad for pretty much the whole global economy. But markets have basically walked around as though that's not on the menu. And at the end of the day, everybody will ultimately come to a deal and operating on the premise that that's what it is for what, the better part of 6 months. And very clearly here, they decided, no, this is different. And I wonder, to your point, if it's not the headline that's different, the headline is the same. It's that the markets are in a space mentally where they feel it's different based on levels and valuation.
Yeah, I mean, let's take stock here of like what really happened the other day. I mean, not only did stocks fall, we saw currencies obviously,
Oh,
still
yeah.
at the downside. Obviously, dollar fell. Even though currencies didn't exactly jump up, though, even though the dollar was down. That's the weird part about it,
No.
right?
And the
Like that was,
Aussie, the most kind of risk sensitive of the major currencies. I mean, if you want to go down the list, I mean, currencies have the same kind of personality types, if you will, as other assets do. And the Aussie is kind of the stock equivalent in the G10 FX world. It's the front of the supply chain, it's commodity oriented, it's sort of the beta in currency world.
yeah.
And it did not have an uptick on Friday. I
Mm-mm.
mean, it just got absolutely shellacked. I mean, that's a big Aussie sell off.
Hmm.
And it didn't have anything to do with anything going on in Australia. The Canadian dollar even didn't have a move as big, although it didn't have a nice time either. That's another commodity oriented currency, but not like the Aussie. Makes sense. China is Australia's largest trading partner. So if there's a kerfuffle with the US and China, then anybody that sends inputs into China is not going to have a good time. To your point, even the euro, which did come up on Friday, it really only came up a little and really only to test the underside of this range that we just broke out. It didn't really get very far. This, like what we're seeing in stocks, looks like a bounce to sell rather than some sort of a bottom that's forming. Although, I mean, I suppose you could make the case here's a bottom in the euro, you stopped right there on the sort of just below 116, whatever these lows are, you held them. So I suppose you could make the argument that you're kind of in a no man's land here on the euro, and maybe you don't want to jump out the window and sell it right away. So right here, maybe. But whatever this underside was, we're through it. So if you get a stall right here somewhere, that's going to be a tremendous sell.
Yeah, no, 100%, man. I mean, it definitely seems like it's a little bit of weak. And again, I wouldn't necessarily be getting longer. I'm still my thesis is still long dollar, honestly.
Yeah.
So that's not going to change for me, despite what I saw the other day. If anything, it gives me the sort of confidence that things might be changing potentially soon, just for a little bit. But again, I think maybe we got a day, maybe two, no, maybe a day. I mean, earnings really kick off for these banks Tuesday morning, so
Yeah.
tomorrow could be a wild card. I mean, really, I fully expect. Yeah, we got an uptick now in markets, and I feel like by the time we get to the open, it's a long ass way to the open, folks, on Monday.
Yeah.
I mean, you know what I'm saying?
And
Like,
it's going to be a spicy way
you
there,
know it
there
is.
too.
You know it is. And seeing like the potential expected moves here in SPX, it makes me feel like, look, first of all, we should really be rejoicing here. I don't know the last time we've had big moves in the overnight, and it's only happening because me and Ilya are on. Okay, people. So you really
Right.
need to
You're
understand right
welcome.
now
Is what
that
is what
exactly.
Jamal is saying. You're welcome.
Exactly. You're welcome for this, okay? We haven't seen overnight moves like this in a while. It's funny because the great Tony Batista was just talking about this, Reezy. He's like, when we first started, first call, it was because markets were moving crazy overnight, and markets have been kind of calm more recently. So we
Yeah.
back, baby. We back.
Oh yeah. I mean, whatever that was on Friday, we're not coming off it as though that was a one-off and it got bookended. We're seeing this follow through, at least in terms of fuzz and dislocation. There's definitely still a wild time to go.
I mean, unless you
Message
believe
from
we did kind of puke a little bit towards the end of the day on Friday.
we did.
I mean, was that really it?
It was a light puking, but a puking nevertheless.
I've never heard anybody say, "Oh, I just had a little bit of puke.
A
I'm
light
ready to go
puking.
again. I'm ready to drink again. I just a little
Yeah,
bit."
just a soupçon. We had we've got a comment here from the depths of paternity leave. Chris is messaging me saying, if China is really clamping down on rare earths, is that worse for the US or Europe? Sell the hell out of Euro USD. I mean,
Well, first of
I know
all,
I'm
it
very
must be
short.
nap time for the kid. Okay, I
It's
can't
got to
believe
be nap
he's
time.
even like tuning in, looking at what's going on right now. It must be.
It's about 6:30 p.m.
Yeah, Eastern. Yeah,
Second midday nap time.
yeah, yeah. If the kid's sleeping at 6:30, look, I'm not going to use the language I could use, but you're screwed. Okay, I mean you're
Yeah,
done. Like
yeah.
you're
Nobody is
it's going to be up at
sleeping
8:30,
tonight.
and you're not
There's
going back to
nobody
bed
that's
until
sleeping
10:30,
tonight.
11. Yeah,
Yeah,
no.
no, it's not going down. I remember when my wife and I had our second, went through the kind of newborn phase, looked at each other and said, here's a thing we're never doing again. This is good. We got two. Great.
I mean, I'll tell you though, so we did the third one later.
Uh-huh.
My youngest is 7 and 9 years younger than my older two.
Mm-hmm.
It was a breeze, man. You know how like you're so worried. You know how you don't let them eat off the floor. Ain't none of
Uh-huh.
that shit. Third time around, like go ahead, eat off the floor.
Eat off the
Okay, you're
floor,
not gonna
man.
die. You'll be all right. It's
Yeah,
fine. You
you'll
know
be
what I mean?
okay.
You want to drink gasoline? Go right ahead. Drink a little bit, just a little bit, just like a
Yeah.
puke, just a little bit,
Yeah,
not too
yeah,
much.
take a sip. Take a sip. See how you feel.
Yeah, it's like it looks like apple juice, but it's not. But it's cool.
Yeah. Yeah. Just take a
Well,
little whiff. See where it takes you. Looking at some of these major assets here, just to make sure we do our due diligence here.
yeah. How about this drop on Friday?
I mean, crude oil. I did not. I mean, I was short going into this.
Yeah.
We talked about this. We were on opposite sides of this thing. I hope you got out quickly.
Yeah, I was out. I got long briefly at 60 early last week. I got out maybe overnight, like on early this past week that we just had. So yeah, I was out completely. Luckily.
Oh, beautiful, beautiful. I kept my short, and so I liked this move. But obviously, I did not have on my bingo card that it was going to be all this. I was looking for a little slow extension lower. It looked like we took out the bottom of a range right here. I said, oh, okay, maybe we'll like edge down a little. Maybe vol will come in a little bit. No big deal. This is now a meaningful move. Now, are you looking to maybe nibble on this, or is this just all of it too risk offish to really do anything until the price action tells you it's anchored a little bit?
Way ahead of you. I actually did nibble. I nibbled on Friday,
Mm-hmm.
and we'll see what happens. But yeah, I
Yeah.
did nibble. I thought it was kind of interesting here, below 60. And
Mm-hmm.
again, I mean, if it doesn't work out, I maybe lose $1, maybe 100. I don't think oil's going to crater $5 in one day or 2 days.
Probably
I don't
not.
think, so it's a nibble. I mean, at the very least, I would get rid of it around the lows of the year, which essentially is 55 and change, which is about $4 from here, I guess, depending on the
Yeah.
contract you look at. So,
Yeah. I mean, it's in fairness, it's doing what stocks are doing here. It's doing what risk is doing. It's having itself a little bit of a bounce. I would think if it comes back in to test whatever this bottom is on the CLX contract, it's about 60-40, let's say.
yeah.
If it comes back into here and holds, I'm probably adding to my short. I'm probably taking it as a mulligan to get bigger.
I mean, like you said, it's doing what stocks are doing. And again, there was a move. Again, I'm sure if we let me see. I mean, I think correlation probably went up a little bit the other day, considering the type
Probably.
that we had, right? And so
Probably.
stocks, oil, all these different types of things. Again, moving in that direction kind of gives me a little bit of tiny bit of comfort with the long and oil here. But again, I don't necessarily know if it's safe for the next 24 hours. I still am operating like the markets are going to fade heading into the open and probably be down on Monday. And if they don't, that's a pleasant surprise for me. But
Yeah.
that's just how I'm bracing myself. Because again, I do have some longs, and so it's like a matter of how am I going to manage that. I mean, I still feel like we could see some pain tomorrow, but I think by the end of the week, we are. I think we're up by the end of the week. I don't know how much higher. I know a lot of people are expecting a solid 100-point return back to 6,700 easily, and the ES and SPX would be 66 half, right? Like I mean, I know a lot of people are thinking that. I don't know yet. I really don't. I really think it's one of those times where we really have no idea, just because of the rhetoric and the way things are moving at this point. And again, China sent basically a threat over the weekend as well, saying that they're not scared of any escalation here. And I think that's when you really get the serious move. This is just literally, as we talk about, day one potentially. So,
Yeah.
oh, man.
Yeah. I mean, it sort of feels a little bit like the way you might make sense of it, where stocks go down and gold goes down with them and crude oil goes down with that. And there's this big thing. It was almost like, well, okay, peace in the Middle East, maybe, or at least closer than we've been in a few years. Fine. Gold down, oil down. Okay, in isolation, that makes sense. Just don't look at the stock market. Okay, crude oil and stocks down. Okay, the president said something that was maybe escalating the trade war with China, bad for the business cycle. Okay, that makes sense. Just don't look at gold. But all of those things happened at the same time, and the dollar went up. So it leads me to think that it's none of those explanations. It's maybe a sprinkling of that in oil. It's maybe a sprinkling of that in gold. It's maybe a sprinkling of this in stocks. But the thrust of what seems to have happened is if it was an asset where there was lots of speculative froth, it went down. And if there was an asset where things were cheap or relatively cheap or something that wasn't near its record high, like bonds, like the dollar, it went up. And so it looked like just cash leaving speculative exposure.
And that kind of seemed, and to that point, that's where the weird part about oil, right? I mean, it was not really any one of those. It was actually a little bit surprising that
Yeah.
oil took the move that it made more recently. I'm sure some people out there will say, the president said that oil is going to go to $2 very soon, and that's why oil sold off. Who knows? I don't know the answer to these things. That's above my pay grade. What I do know,
Yeah.
I was a little bit surprised that oil sold off the way that it did, with dollar being down as well. So that seemed there was plenty of dislocations out there if you really looked
Yeah.
at it on Friday.
Before we call it a day here, let's do a little speed round.
I
What
like it.
what are you looking at exposure wise? What is your best idea going into this week? Is it an earnings idea? Is it a data idea? Is it just a positioning idea? What are you looking at that maybe you don't have on yet where you're going, well, if this thing just does XYZ thing, or if XYZ thing happens, this is what I'm excited about this week?
That's hard to say because I got so much shit on right now. I got a lot of trades on, bro. Like
Me too,
I've
actually.
been the main person talking about how great this entire market was before Friday. I mean, there's
Yeah,
so many different things moving.
yeah,
So I can't fully answer it that way. As far as what I don't have on, to answer your question, what I'm looking at, the trade that I'm looking at the most is my SPX butterfly. I got a
yeah,
100 point wide I got a 50 point wide butterfly, excuse me, in our Tasty accounts. I got a 100 point wide butterfly in my own personal account.
yeah, 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 yeah.
I got the personal, I got 6,600, 6,700 is the middle, 6,800. And the Tasty account, I got 6,650, 6,700, 6,650. So a ways away either way.
Mm-hmm.
That's the play for Friday. And I got that for Friday.
Yeah,
I will say, what am I looking at overall? Look, I'm looking at a lot of look, you can't tell me that the AI names and the energy names that have been playing off of that and the data center names are not in the crosshairs right now. I would say
yeah,
if we're really going to sell off. Um, Honestly, if we're really going to, if you told me that we're going to sell off another 5%, I'm buying puts on a lot of those names. As much as I like them, I like the Palantirs of the world. I like Nvidia. I like AMD. But I'm buying puts on those names. The Oklos of the world, because that's exactly what are going to get hit first. We always talk about this in a market.
yeah.
If you sell off, they go after the generals, and those have been the generals. It hasn't been Amazon. It hasn't been Google. It hasn't
Right.
been Microsoft. It's been those names. It's been the AI names, related names. It's been
Yeah.
the energy related names. So if there's one thing I'm looking for to see if that happens, I don't know if it does, but those have been the names that have kind of been the market. Those are the ones when you come in every day, most of those have been up, the Oracles, the AMDs, etc.
Yeah.
So I am looking at that. I'm also looking to see if consumer staples begins to outpace consumer discretionary just a little bit. Anytime
That's
we're
a
at
big
market
tell.
all-time highs, right? We have a consumer discretionary outpacing things. So I would think, and I put up a chart on that recently on Engineering to Trade about how consumer discretionaries are outpacing, as it should when the market is on all-time highs. People want the things that they want as opposed to the things that they need. Consumer staples
Right.
they need, and I feel like that could change. And you just see that chart right there. So I would say those are the main two things I'm paying attention to.
Yeah, I mean, if we take a look at XLY here and we compare it with XLP, just to kind of get a sense of what this spread looks like. Here we go.
There it is.
We can, I mean, there it is. So we can see that we had a really nasty day for discretionary relative to staples here. So this is the discretionary minus staples spread. Obviously, we can see discretionary has been outperforming since April. That's just another way of saying risk on. Shock of shocks. This looks just like the S&P. Just like Bitcoin, just like NASDAQ, you name it, that's what it looks like. Risk on in the most straightforward sense. This is a break. I mean, if whatever kind of series of higher highs and higher lows this was, it isn't that anymore.
Yeah.
So I don't know what the market is worried about here, but they're obviously worried about something because the price action tells you this is not that. This is something different. This is not the kind of dip that people have been buying. And I mean, looking at the Mag 7 ETF here, just to kind of get a catch all, you see that basically since the Fed was right here, you've had rotation in these names where one of them goes, other ones don't, and you're just kind of oscillating in this range. Friday, that was a clear breakdown. That range is gone. So I'm looking very closely at all things risk off. I don't think that I'm nearly big enough in my risk off positions. I only have some put vertical on SPY here because obviously I've been fighting this market pretty much all the way up from April's lows. I mean, I got out. So just to give you a sense for what my year in the stock market has been. So obviously I started selling here once we took this out. So the beginning of the year, tremendous. This was great. I actually bought this bottom thinking, okay, this is crazy.
Yeah.
But I only rode it up to here. basically saying, oh, okay, we're back, we recovered the shock, and started already selling back into it around here. That didn't work. Try to get here. That didn't work. Try to get here. That didn't work. And the way I'm doing it is basically anytime that the futures seem to have some kind of an attempt at a turn, like here, like here, I put a little put vertical. I mean, obviously, vol has been dirt cheap, so you can get a put vertical very, very affordable. You can put a bunch of duration into it. It's still super cheap. So your delta exposure is very diluted. And you just see, oh, okay, it didn't go. Cool. You lost a little bit. Let's take a stab next time. And what's kind of papered over these losses for me was the dollar, which I was massively short the first 6 months of the year, having a terrible 6 months. And so the dollar really bailed me out. So I'm very cautious in my fighting of the stock market because it doesn't want to be fought, and it's made me pay for it.
So that being the case, seeing you see this big red bar, I mean, I would think this makes you want to get short, right?
I mean, I'm already short a little bit on ES. I started selling it a little bit right here, going again. These candles look a little fuzzy. We've got some bearish engulfing over here. We can't really get momentum on these bars. Let's take a little nibble, see what happens. Well, I didn't have this on my bingo card, I can tell you that. But this looks like it's a break now, and so I'm going to be looking this week for opportunities to get more short on some kind of a bounce. I'm especially interested in the NASDAQ, maybe bouncing. I mean, it's already on the way there, but if it manages to basically end up under this come tomorrow, if we get like a small down day tomorrow and end up somewhere in here, that's going to be juicy. I'm probably already more long dollar than I should be. I'm probably already overexposed. I probably already have too many eggs in that basket. But I'm kind of Stan Druckenmiller logic in this sense, where it's not so much that I don't like to put all the eggs in one basket. I do. I like a thematic idea and then just watch the basket very closely.
I mean, it's you say that it makes me think of how interesting this year has been. I mean, just like you
Yeah.
said, you talked about Sell America. I think you kind of mentioned that earlier, and that was something
Yeah.
we were seeing, right? We were seeing bonds get sold, we were seeing stocks get sold, we were seeing dollar get sold off.
Yeah.
Just think back to what we just saw on Friday. I mean, again, dollar and stocks got sold up, but bonds were up. This has been a very unusual year in that type
Yeah.
of way, and it's weird to call a year where we're reaching all-time highs consistently unusual, but
Yeah.
it's been a very unusual year, I would say. I mean, it's hard to immediately draw conclusions from some of the things you're seeing, which I like to do a lot. I like to be like, oh, okay, cool. We got markets down, dollars
Yes.
probably up, and that explains, and that gives you like
Yes.
some kind of comfort, right? And
Yes.
I don't know, man. Like the sell off again. I'm not saying the sell off was unwarranted on Friday. I think it was time. And again, it was not crazy. I mean, truth be told, I mean 2.5% is probably worthwhile doing. And again,
We've seen worse.
yeah, we've seen worse. And if you, for those of you, again, everybody looks at the things different technically. I mean, I look at simple moving average. We literally bounced off of the 50-day simple moving
Yeah.
average.
Yeah. Yeah.
Looking at that, so again, it still kind of followed some technical rules. But again, but going forward, the all bets are off. Anything could happen. All it takes is certain tweets. All it takes is certain type of movement, certain type of activity that we see in options, and markets could completely crater just a little bit, or they could bounce back if they say tomorrow. Everybody's talking about the taco trade. If that's going to happen tomorrow, look again. My butterflies will welcome it. I have no problem with it, and
Yeah.
most of my deltas will too. But I'm prepared for anything, I think, heading into this week. And again, we're about to really pick up steam here with earnings coming up. We don't even know if we're going to get this data. We still got a government in the middle of a shutdown. We still got markets at all-time highs. We just touched all-time highs in Bitcoin last week, only to fade
Yep.
really hard. Gold and silver, I know we've been dancing around them, but again, those guys, 7 weeks, 8 weeks in a row that they've been up. Hell, I love
Bonkers.
momentum plays. I will ride a momentum play until it shows me otherwise. This shit's getting a little crazy. I mean,
I
eight
mean,
weeks
this
in a
is
row.
wild.
I mean,
This is
come on.
wild. This
This is the
gold
biggest
chart is
story going on
wild.
in markets, and they still have. They're still up the most as far as major assets. I believe
Yeah.
gold and silver still up most. Okay, on the year, right? So,
I mean, look at
wow.
this chart. Stocks wish they had a chart this good.
Dude, if I showed you any stock right now, if it was Nvidia, if it was Meta, if it was Microsoft, and they look like that, you'd be like, I'm getting short this thing. But again,
Immediately.
gold is not the same as those. I will
No.
say that.
No. No.
Not the same.
No.
But
No.
you'd be thinking it.
Yep, and those PBOC pockets, they're deep, and they've been buying and buying and buying. So you got to be careful. But I'm out of both gold and silver at this point. I had a nice ride. I got out a little bit earlier. That's fine. I don't need to make every single dime on the way up. That's fine. Um, I'm going to be very, very cautious about selling into those moves. I'm also going to be very cautious about over extrapolating this sell off. And I think before we wrap here, that's really the point that you just made that I think is the most salient. Be ready for everything, be nimble, because this is a weird environment. We don't have economic data. We've got Fed speak and earnings, and we don't know. And all of that is very subjective.
Yeah.
All of that is very open to interpretation. So is economic data, but at least economic data, you get a number. And you go, okay, this is an objectively good or bad number for the economy. Now let's see if the markets want a good economy or a bad economy. Because sometimes they want a bad economy. Sometimes they want rate cuts more than they want economic growth. And we've seen that to some extent this year. So at least there's a binary number. And we're not in that world. So be nimble, be ready. I'm definitely not going to over extrapolate on the downside, though I am tempted to. But I'm gonna err on the side of caution here because this could be wild.
Yeah, I really think it could. And again, I'm ready. I'm kind of ready for anything. You can almost kind of feel this coming at some point. Again, when we have so many days up in a row, whether it's gold and silver, when we have a market that's generally trending higher, starts out low some days and eventually ends the day up, and you have such an ecosystem, which again, I'm not saying there's anything wrong with this AI ecosystem. I'm not one of those people. I'm not gonna say there's anything wrong with this AI ecosystem.
Sure.
I'm not saying that this is the dot-com bubble and we're heading there. The difference
Who
between that,
knows?
and again, things rhyme, but they don't necessarily follow the exact same. They don't necessarily repeat. This ecosystem is showing a lot of money, albeit changing hands at times. I will say the whole pushing money from OpenAI to AMD to Oracle, etc., is a little weird. I don't really fully understand that part. But the
Yeah.
fact remains that there is a lot of money being thrown at it. That was not the same case in the dot-com era. Pets.com, that was never going to survive people. Okay, I don't know
No.
who thought that was going to work. But it's just not. It was just not. Maybe
To your
close to
point,
pets.com to
nobody
work
has spent $1 million on a Super Bowl ad on something stupid yet.
yet. Yeah,
Yet.
exactly. Yet, and that's the thing. So that's still a huge ecosystem in our market. It's been one of the things that's powering the market higher for sure. But I will say, just from the standpoint of how flows work, from how trading works and how flows work, if we have a huge sell-off, a multi-day sell-off, those are going to be the names that are going to suffer. I'm just going to tell you. And whether you don't necessarily have to ride them down, maybe you can just be ready to get long deltas at some point where it does get stupid, because all things get stupid. We've seen Tesla
Yeah.
get sold off in a way that it got stupid. Even a couple of
Yeah,
years ago,
yeah, yeah.
stock was trading 100 and change, folks. Like we could have all stepped in, but none of us wanted it at 100. But we all been tripping over ourselves at 400 to get it on the way higher, and
Yep.
that's just how it happens sometimes in markets. So, I guess for the week, Again, coming into this week, I didn't really change too much on Friday.
Yeah.
I wasn't scared enough to change too much on Friday. It was a 1 day move. And so it's not like I closed out a bunch of positions. The only real short deltas I have are a few of my strangles that were really kind of dislocated because we had just been moving higher. I also have some short delta in I have a couple of diagonals. I have one in SPY and I have one in SMH put diagonals. And then most of the other stuff is kind of long delta. And so my way of managing this week is just to kind of see what happens on Monday. Even Monday, I'm not going to overreact because in my mind, I still feel like earnings are going to settle the market down some. Coming on
Yeah.
Tuesday, Wednesday, we got airlines, we got obviously the banks, a couple of other things. If for some reason those earnings are ugly for some reason with the banks, maybe
And
I'm a
the
little
markets
worried in my long.
care.
Yeah, and the markets care. Maybe I'm a little worried in my long delta.
Yeah, yeah. I mean, I didn't add any extra bearish exposure on Friday. I just got more long dollars, which I guess is a kind of way to get a little bit of bearish exposure
Should
here.
be,
But
but it didn't happen on Friday.
no, no. I mean, obviously, I was short Aussie. That was one. But otherwise, the dollar, let's say, was mixed depending on what you looked at. If you looked at the euro, euro was up. Yen was up. I used those moves. The Swiss franc was up a little. I sold some. The euro had an interesting move. I'm looking at it closely. I'm already very short euro. Pound had a nice move. I sold some pounds. I was a little bit underweight there. But that's really it. So I'm going to be watching closely. Probably the biggest things on my shopping list are NASDAQ puts, maybe Russell puts, but I need to see this market really show me a price level where that makes sense.
The one thing we probably didn't talk about, which I know you're fully aware of, was there any change on percentage chance of rate cut? I didn't even look at that actually.
So it's not really very
Probably didn't.
active recently. So if we look at where we are for October, we're at 97%. So no real question there. A week back, we were at 96, so it hasn't really moved very
Yeah.
much.
Okay.
A month back, we were at 79. So we're basically holding where we were as of the Fed meeting. And then looking at December, we have been climbing a little bit. So we got, and this is pretty impressive, we got to 96% for December's rate cut. So that was really the only move. Is Friday cemented that cut. But the day before, we were at 91, 92, and a week before that, we were at 86. So what didn't we know here? Like, okay, by a couple of points, we're a little bit more certain. But these rate cuts were on the board. For me, the big question is what happens in 2026 because the markets and the Fed are still a world apart. The Fed thinks we're going to get 25 basis points. The markets are now at 66. So that's a big divergence.
Yeah.
The markets very clearly don't think that the Fed's squawking about inflation makes any sense. They clearly think we need lower rates because the economy is messed up in some sort of a fundamental way or some kind of a credit concern is imaginable enough that the markets go, no, listen, we need at least 50 basis points and probably 75.
Hmm. Yeah, I mean, I'm really not a whole lot changed there for
Yeah,
this for this
pretty
more
steady.
recently. So, we'll see.
We'll see. All right, everybody, that's first call. Make sure your helmet is on tight. Make sure your seat belts are buckled. Keep your hands and feet inside the vehicle at all times.
All times.
This is going to be a week, might be the week this year, but we'll see. That was certainly a spicy start on Friday, the Friday before earnings, no less. Markets don't typically have conviction on that day. So Let's see. We'll be back with you as of 1:30 in the a.m. in Chicago with our friends in London. And then, of course, the usual tasty programming going into the Wall Street Open on Monday. Don't go anywhere. It's going to be a fun time this week.